This is David from UnaTerra. We're just waiting for a couple more attendees to join. So we'll give it 30 seconds and then we will dive into the session.
David, can I just confirm that you can see the slides that I've just brought up?
Yes, I can.
Excellent.
Okay, so I'm gonna dive in, everybody. Hopefully you can hear us and see the slides okay. So without any further ado, start again. Good morning and thank you for joining our webinar on international payroll and managing international operations. This is our first webinar of 2021 and will be the start of a rolling series of webinars and videos designed to provide technical, but more importantly, practical advice and tips around all aspects of ensuring our prospects and customers manage their people and corporate entities in a compliant way. By way of a brief introduction to myself and my co-presenter. My name is David Wall and I am the CEO of UnaTerra, and I'm joined today by my co-founder and CRO, Julian Christmas. I am a lawyer by background, but have been working in the international expansion space for over 15 years. Julian is an accountant, and we founded UnaTerra about 7 years ago after working with a number of fast growth companies wanting to build an international footprint. Notable projects we have supported have been Tesla's European rollout and Airbnb's global expansion. Not all of the customers we work with are household names, but invariably a lot of the questions we get asked have similar themes, particularly around hiring and employing people internationally. It's important to note at this point that whilst I do reference household names, most of the work we do at UnaTerra is for customers with 1 to 10 employees in multiple international locations. UnaTerra is a UK headquartered business with operations in the US, India, and the Philippines. We currently support customers in over 70 countries today and provide a range of services around international payroll and HR, PEO, and other business critical back office services. We're proud to say that we act as an extension of your HQ team and are very familiar with the challenges you will face having to manage international operations on top of you doing your day job. The format for today's session is simple. We will talk for about 20 to 25 minutes around some of the key topics that we face day in, day out, and inevitably will come across your desk. And then we will open the session up for questions. Any questions can be posed via the chat facility. I will now hand you over to Julian, who will take the session forward. Julian, over to you.
Good morning, everybody. Thanks for the introduction, David. So just building on what David said about the plan for the webinar today, what we talk about today is built very much on our practical experience and a lot of the situations that we've dealt with over the years with our clients, and the material for today is informed by the questions that we get most often. So hopefully it's useful to today's audience. It's very much informed by the wider global audience of your peers who want and need to understand how to go about hiring people in other countries, payrolling them. Oh, excuse me, I'm sorry. I think my Slack message is coming up. Apologies for that. Let me just see if I can. That's better. Yeah, apologies for that. Yeah, so what we choose to share today is very much informed by the questions that come up and the situations that we face with our clients day in, day out, in terms of typically, how do I hire somebody in this country? What's the process? What infrastructure do I need? What are the key things to be careful of? And some country specific stuff too. So that said, the areas that we'll cover today, very critical thing is the different options available to engage in payroll talent internationally. So there are various options. and it's helpful to understand what they are and a little bit about the pros and cons of each, so that we can cover off, when you're trying to engage a particular type of person or talent in a particular country, what are the options, what are the pros and cons to weigh up, and then that helps you make an informed decision about what solution to implement. So which option makes sense for you in different types of business activity. So the solutions that we recommend to our clients drive off various things. Which country, how many people you're hiring, what type of activity will they be undertaking, because these are the key bits of information that we need, particularly around what are the local employees going to be doing, which inform us in terms of guiding our clients. The compliance exposure for each option. So there are some hiring options which carry certain tax risks or employment law risks, and it's important to understand what the trade-off is between each solution and what risks they represent, and perhaps what the potential costs are. We'll talk a bit about employment law considerations. A quick look at expats, because we do deal with expats fairly frequently. And for us, they're a slightly different population in terms of, what solutions we implement, in terms of how we go about employing them and payrolling them in other countries. And then we'll do a bit of Q&A at the end. And as David said, please feel free to drop any questions into the chat facility on the right-hand side of the screen, I think. And then we'll deal with those probably at the end. But if they warrant addressing as we go along, we will do that. So just at a very high level, the options for engaging with talent, we won't necessarily call it hiring, but for engaging talent internationally. The situations that we deal with most frequently fall into these three main categories. So hiring as contractors, it's a very common situation that we have where our clients want to fall back on the simplicity of engaging people as independent contractors in different countries. There are obvious pros and cons to that, and we'll talk about that in a minute. But the key thing to understand is that although we reference it as hiring, it doesn't create, or technically on paper, it doesn't create an employer-employee relationship. So that's really treating the individual like a vendor. The two other options are very different solutions, one of which is using an employer of record, so EOR, employer of record, sometimes known as PEO, sometimes known as employee leasing. But this solution involves essentially outsourcing lock, stock and barrel the ownership of your employee in a different country, so that employee actually has an employment contract and is contracted to a third-party company who provide fully compliant employment locally in that country, and they simply will invoice your company for their service, and that would typically be the cost of the employee plus a fee for that service. So there's that sort of third-party employment solution, and then there's direct employment, and this is more our area, although we're able to advise on all of them. In terms of implementing solutions, UnaTerra is mainly geared towards direct employment. So that is engaging directly and payrolling them in the name of your business, and connecting them and contracting them directly to your company. And there's a couple of different ways of doing that, which we'll cover off in a moment. One key thing, it's permanent establishment risk is something that invariably comes up in the conversations that we have with our clients and prospects. And it does inform what solution we get in place. And not everybody understands permanent establishment risk. Not everybody's heard of it. So I wanted just to cover off permanent establishment risk, because it comes up in the later slides, and it's good to define it. So what is a permanent establishment? If you ask people, a lot of senior finance and HR people have a notion as to what permanent establishment is, but it's quite difficult to define. A permanent establishment is a business presence which triggers a certain tax exposure in a country. So that can be done on purpose by creating a legal entity in a country. A lot of international expansion is intentionally creating a permanent establishment by opening a legal entity, opening an office, hiring lots of people. It's also possible to trigger permanent establishment by mistake, or to create a permanent establishment, but not to try and fly that below the radar of the local tax authorities. And there's risk there. And this is permanent establishment risk. Permanent establishment risk is the risk that you create a permanent establishment, so an exposure to a certain tax in a country inadvertently. And there are some implications of that. Principally, that the local tax authorities will attempt to levy tax, whether it be corporate income tax or VAT potentially on the activity that you're conducting in that country. So what creates PE risk? Commercial activity is one. Typically in our world, that's sales activity. So if you hire somebody in a different country where you don't have a legal entity, then that generates a permanent establishment. And therefore you run the risk of exposure to taxes in that country and some sort of tax assessment, which generally won't be welcome. It's a very theoretical risk. It doesn't often crystallize, I have to say. In our experience, there are certain countries, Sweden is one of them, where they're very hot on it. So what creates permanent establishment risk? Commercial activity. So if you have salespeople and you employ them essentially in a way that doesn't recognize the activity they're undertaking. Another one is senior management activity. So if you have director level or founder level people in a country, or even people with titles like VP or senior director or director, then that sort of decision making and business management function creates a permanent establishment risk. And the third one is a fixed place of business. So if you have an office, even if it's in a co-working space, so a WeWork, then that also can create permanent establishment. And the reason for raising it is that it comes up in the later slides when we talk about the differing solutions. So let's quickly now look at what are the main options for hiring people internationally. And I'll try and go through them reasonably quickly. I think most people are aware of what the different options are, but the key is really discussing the advantages and disadvantages and the use case scenarios. So when is each one appropriate? So hiring international contractors, or indeed contractors domestically in the UK, what are the advantages? It's super quick. Administration is very low because they simply invoice for their time and it gets processed through accounts payable. It's as I say, treated like a vendor, and there's no admin costs. So what the contractor charges is the cost of the business. There may be VAT on top. VAT is not a cost to the majority of businesses, and so what they invoice is what gets paid, and there are no on costs, no benefits or anything else. The disadvantage is limited application. There are hundreds and hundreds of situations where independent contracting is appropriate, but there are also many situations that we come across where it isn't. The companies seeking the simple and cheap solution, which might apparently avoid exposure to employment law, for example. So it's limited in what you can correctly achieve. There is potential for liability, and that is linked to independent contractors who are on paper independent contractors, but they're really, the look and the feel is it's an employment relationship. They really get classified as sort of de facto employees, and there's all sorts of exposures and liabilities that can flow from that for the employee themselves or for the contractor themselves, but also for you as an employer. There is a risk and an exposure to various types of liability. And the last one is that this can create permanent establishment risk. So permanent establishment risk isn't just created by your employees. It can be created by hiring contractors as well, who represent your business in another country. They may be undertaking sales activity. They may or may not be an employee. They can be a contractor, but if they're a contractor who is selling for you, there is still a possibility that you create a permanent establishment and that your business is therefore exposed unintentionally to some local risk. Use case scenario, project specific work, or hiring people in the short term, classic and legitimate contracting situations. When shouldn't you engage contractors? Yes, the usual sensible rules apply. In a very if they're long term, if they're essentially permanent, if they work for your business full time and don't have other clients, it's a relatively common sense situation, but it's one that we have to advise on fairly frequently. The next one is, so moving on from independent contracting, we then go on to PEO, or employer of record, and this is, again, just to explain again, this is where your employment situation is essentially put with a third party in a different country. They onboard and get employment contracts in place. They payroll the individual, and they simply charge your business for the full cost of employment plus a fee for their PEO or employer of record service. So the advantages are it's almost immediate to switch on. So if you have identified that you desperately want to payroll or onboard somebody in a country where employing is actually quite complex, this can be an immediate solution. So countries like Brazil and China, which the timeline from pushing the button and actually being ready to employ somebody directly can be easily 3, 4, 5 months. PEO represents an immediate market entry option. In terms of admin, it's quite straightforward. The PEO provider invoices your business for all the costs, and you pay them. You essentially own the time and service of that individual, but they are contracted to the third party. And it's relatively inexpensive up front, actually, because PEO providers, employer of record, the service providers, the upfront cost of implementing this solution is pretty low. In terms of disadvantages, it's still a big compliance grey area. This whole concept of PEO, employer of record, is sort of ahead of the curve in terms of tax compliance, and it does create a grey area, and there are risks which I think a lot of people aren't necessarily too in tune with. Limited benefits options. So usually a PEO provider will only have a certain range of benefits that can be extended. And if you as an employer want to extend your typical suite of benefits to these employees, there can be difficulties with that. Another one is corporate culture issues. So of course, they're not your employee, and they're essentially employed and contracted to a third party. That does create, and this is something we see quite often, and it's an important one to flag, that those employees can feel a little bit disconnected from your business, and that in integrating them into your corporate culture can be more difficult because they don't have that sort of direct connection that your directly employed team members do. So that's one that is almost like a hidden disadvantage of PEO. Can get expensive quickly as well because one person, it can make sense to employ one person through PEO in a country. As soon as you increase the headcount, the costs simply multiply. There aren't really economies of scale with PEO. So even in complex markets where it makes sense to have one person on a PEO arrangement, if one becomes 3, it's very unlikely that from a pure cost perspective that's going to be the most efficient solution. And these are situations that we deal with regularly. We're always advising clients about when to use PEO, when to stop using PEO, and when not to use it in the first place. We do recognize that it's a really valuable service, particularly under the use case scenario at the bottom. If you are trying to hire people quickly in very complex markets like Brazil and China, or indeed in the long term, if you just want to hire one person in one of these complex markets, the cost of PEO, although it's quite expensive, it won't be nearly as expensive as setting up a legal entity, running with payroll services, accounting and compliance services. They all add up, local representation services. So it's something we can help with, and we advise on regularly, which is what is the real cost of employing somebody in a different country, and then comparing that with the costs of PEO. One thing to flag, for example, is if you want to hire somebody in Brazil, the PEO service will probably cost between 10 and 15% these days of the individual's salary, which sounds okay, but actually it's not the salary, it's the total cost of employment. and on costs in Brazil typically run at about 80%. So it would be applied to 180% of the salary, which obviously is a lot more than the sort of headline cost of 10%. And on top of that, the total cost gets rolled up, and I think as of today, 13% a VAT levy is charged on the whole lot. So that's the cost of the employee and their on costs and the PEO fees. 13% of that total is levied as VAT on top, and your business won't be able to recover that. So it's really important to understand what the total cost is when engaging with this type of solution. This is more our territory in terms of the services that we provide directly to our clients. And this one, direct employment without a legal entity, is an interesting one because a lot of our clients and prospects aren't aware that this option exists. And that is employing somebody in a different country where you don't have a legal entity and payrolling them in a way that's fully compliant with obviously tax rules, social security, employment law. This is fully compliant. It doesn't work. There isn't this option in every country. But this is a solution that we implement a lot, especially in Europe and in various other countries. You know, it works in Canada, Australia. There are lots of countries where it doesn't work. But what we simply do is we take a non-resident company, which is usually, you know, HQ, could be UK company. We register it for a limited suite of tax and sort of social security registrations in another country. And what that does is that enables us to run a payroll in. So let's take Germany as an example. We can register a UK company in Germany. We can run a payroll. We can onboard the employee, provide them with the benefits that they need. All that can be done in full compliance, but without the need to set up a legal entity. As I say, this is something that this is a solution that we implement, you know, really regularly. And in terms of, you know, the pros and cons, it is fully compliant. So it's fully compliant with employment law. It's fully compliant with local tax law. It creates that direct relationship with the employee. So culturally, you know, they feel properly part of your business. It's compliant also from the point of view of stock options and benefits. PEO and stock options are an interesting sort of discussion point as to exactly how compliant that is as a bundle. And it's relatively quick and it's low cost. So this is a solution we implement a lot. Usually the lead time is about 4 weeks, and it's low cost because, you know, we charge a monthly cost for running the payroll, but there are no other regular fees involved. There's no local accounting requirement typically. There's no need to make VAT filings and registrations. There's no big ticket annual compliance, corporate tax returns and so on. So it's a very light touch solution. As I say, lots of our clients have never heard of it, so they're very pleased to hear that it's possible to hire people in the Netherlands or Sweden or Italy or Spain without a legal entity. In terms of disadvantages, it isn't available everywhere. So it's a principally European concept. There are lots of countries where there is something along these lines, but they can be so complicated as to not really be a genuine option. So it's not available everywhere. There are lots of countries where you have to have a legal entity to hire even one person, and it doesn't mitigate permanent establishment risk. So it doesn't really work if you're hiring senior salespeople, director level people. They need to be accommodated through a legal entity because that does give protection from permanent establishment. And in terms of use case, small teams, when I say small, sub 4 or 5, so small teams, typically who are engaged in non-commercial activities. So it might be customer support. It could be, you know, something along those lines. Could be even sales support or engineering. It works for all of these types of situations. It just doesn't work with people who are over salespeople or who are senior management. And the last option, which is the one I think everyone's acquainted with, is you know, employing through legal entities. So you need to employ people in another country. We incorporate a legal entity. We make all the tax registrations. That creates, you know, by definition, local tax exposure, corporate tax, VAT, everything else. But what it does do is it provides a vehicle to be totally compliant and not have to work in any grey areas and run any uncontrolled risks. Creating a legal entity gives you the ability to control and deal with all tax risks and manage the situation exactly as you want to. So the advantages are it's fully compliant, not just with HR law, but also the full gamut of tax laws. You control your corporate tax exposure, everything else. You still get the direct relationship with the employees. Work visas are important. So if you want to transfer people to other countries to work, set up a new office somewhere, usually in order that the work visa situation can be dealt with, it has to be done typically through a local legal entity. And also we can take advantage of tax incentives. So, a lot of companies that come to the UK actually want to do it to take advantage of our R&D tax credits, for example. And there are other countries, Canada is another one, where setting up a legal entity and enjoying the benefits of their R&D tax credits is, it's a good objective to have. In terms of disadvantages, more expensive option, of course. We have to incorporate legal entity. There are sometimes some related local representation costs which can mount up. The administrative burden is higher. This is something we deal with every day. So we incorporate legal entities and provide lock, stock, and barrel support to our clients so that they don't have to worry about local VAT filings, corporate tax filings, payroll filings, and local compliance. So that's something we take care of for our clients. And in terms of UK use case scenario, if you're building bigger teams who are going to be permanent, you're going to have an office, you have senior management. Teams of more than 5 should always really be accommodated through a legal entity. And if anybody has any specific situations that they want to talk about, please contact us afterwards, and we can happily talk about which solution works best. David, you've asked something.
Yeah, Julian, one of the questions on the chat relates to Spain and whether this light touch solution would apply in Spain. Are you able to comment on that?
Yeah, so Spain does have this light touch solution, this being the employment, sorry, that was from before, without legal entity. It's a little bit more complex than some countries, but it certainly is possible. It's actually it's a country where we provide a lot of support. Actually, we have a lot of clients in Spain. It's a slightly heavier weight than say the UK, where you simply set up and run a payroll. We need to provide tax representation, fiscal representation services in Spain, but it absolutely is possible. And in fact, in terms of countries in Europe where it's not possible, I'm struggling to think of any immediately. The Ukraine is a country. I was working on a proposal yesterday for the Ukraine, and there's no option to do it there. But broadly speaking, it is available in all European countries. So that covers off the options. Very quickly looking at, in terms of compliance, what does each option give you? Thinking about it from a sort of an HR and finance and tax perspective, what does each option give you? Well, independent contracting, by definition, doesn't give you any sort of employment, doesn't tick any employment boxes, essentially. So it's not, and doesn't try to be compliant with employment law. You can't offer benefits. It doesn't protect you from permanent establishment risk. Visas aren't really relevant. And technically, you shouldn't be giving stock options to independent contractors, because if you do, or share options, because if you do, that's a strong indicator of an employment relationship. Stock options to independent contractors are a red flag from an employment law perspective. PEO ticks a big box for employment law. It does, it provides you with a compliant hiring solution locally, but you can't really necessarily offer all the benefits you want to. It doesn't protect from permanent establishment risk. Visa sponsorship, in some cases, it can actually provide a visa sponsorship option, but it's a tricky area, and it also doesn't give any sort of compliance from a stock option perspective. That's a grey area. Where you get to direct employment, you get a lot more compliance. So the right-hand column is employing through a local legal entity. That ticks all the boxes. It gives you the ability to control and protect yourself against all of the things listed here. Compliance with employment law, you can give whatever benefits you want. It gives you the ability to protect against permanent establishment risk, sponsorship of visas, and fully compliant from a stock option perspective. And the only difference between that and the employment without a legal entity is that when you don't have a legal entity, you don't have the protections that a legal entity provides. One of them is against permanent establishment, and the other one is typically visa sponsorship. Without a legal entity, you're not going to be in a position to sponsor visas and transfer people from one country to the other. So that's the compliant exposures. I think we've only got 2 slides left. So one of them is just a quick consideration of employment law, and the other one is looking at expats. So from an employment law perspective, it's really important just to cover the headlines, and this may, variously, some of our clients, some of the people on the webinar may totally get this, and for some, there may be some question marks here, and it's helpful to clarify. So one of them is, when you're hiring people in another country, whatever solution you're implementing. So let's consider whether you're simply employing them directly. Never mind independent contracting or PEO. If you're employing people directly, whether you have a legal entity or not, some really important things to consider. One of them is that local employment law always applies and prevails, and there are no exceptions. So if a UK company hiring somebody in any other country, that employment relationship will always be governed by the employment law in that other country. And the number of times we've dealt with companies who come to us and say, it's great, we found a new employee, it's very exciting. We've hired somebody in Spain, and we've just given them a normal UK employment contract because we happen to have one, and they're going to be employed by the UK company. It's that's a massive red flag, and absolutely can't be allowed to happen. So employment law of the country where the employee resides always prevails, and it's critical again to have an employment contract which is compliant with that local employment law. And I think the audience today is mainly or all UK. I think we're somewhat protected from the complexities of employment contracts. Our employment contracts tend to be very simple. We look at it and I think we scan it ourselves and understand that we're getting the allowances and the benefits that we expect, and then that's fine. And it's not at all uncommon when hiring people in other countries for them to engage with their lawyers to review the employment contract, to make sure that it is fully compliant, that there are, for example, in some countries, there are union requirements and collective bargaining agreements that need to be assessed and complied with. And the employer, and we do this on behalf of our clients, the employer needs to make that assessment. Sometimes the employee will engage their lawyer to just confirm that the assessment is correct. So this isn't stuff we really have to deal with in the UK, and so we don't always understand what the risks are, but it's really important to get fully compliant local employment contract. Again, this is a big area that we deal with through our HR consulting team, is providing fully tailored, fully compliant employment contracts, just to close up any exposures that the company's running in terms of local employment law. As part of this, local statutory minimum benefits will apply, and whatever employer insurances are required. A classic one is hiring in France. You have to understand that the French employees will always get French benefits, French statutory benefits. Holiday allowances will be dictated by the French law, and as an employer, you have to provide certain insurances in the same way that somebody coming to the UK and hiring people here needs to provide employee liability insurance and public liability insurance. There are those sorts of insurances which must absolutely be provided when taking on people in other countries. There are some aspects, so these bottom 2 bullet points, there are some aspects of hiring people in other countries that are just totally alien to us as people based in the UK. There are some things that come up which we're not even aware of as concepts. And classically, it's things like if you hire people in countries where there's holiday loading, so you pay them a salary, but they get extra salary when they take holiday, or in countries like Italy where all employees qualify for
13th and 14th month salaries. Some countries it's just a 13th. Some countries you have a half. I think Norway you have a half extra salary in a particular month. And if you don't understand that is required locally, sometimes those can become marginal costs of the business. So they need to be dealt with correctly in the employment contract to make sure that you don't inadvertently. So the Italian case, you take on an employee in Italy, 13th and 14th month salary. So essentially, if you don't address that correctly through the employment contract, you may end up paying 14 months of salary where you thought you'd only pay 12. And the employment contract can circumvent that and essentially make the 13th and 14th months part of the base salary. It's quite complicated, but the point is that there are risks to be run which can result in very real costs to the business. There's some other exposure around, for example, the need in the UK. If we hire somebody, it's quite easy to say, start today. We'll sort your employment contract out tomorrow, and we'll backdate it to the beginning of the month because you've been working for us. It's quite normal for there to be a sort of disjointed timeline in terms of the onboarding. Countries like Spain and Italy, you can't do that. So employment contracts or abbreviated versions of the employment contracts actually need to be filed with the Social Security for each employee, and it needs to be filed on or before the start date of the employment contract reflects. So the idea of hiring somebody today and then putting in place the various payroll registrations that are required after the event, that's non-compliant, and what that can do is it can invalidate some of the clauses in the employment contract, and of course that puts you down the path of non-compliance and opens your business up to exposures and litigation. So the final piece, just on expats, because we do deal with a steady flow of clients who want to set up in other countries and then immediately transfer people from, say, HQ. Things to consider really around this are work permits and visa considerations. So if you want to transfer somebody today to Singapore to start a new office, in terms of the ordering of events, first thing you need to do is set up a legal entity. Then that legal entity needs to apply for the ability to sponsor visas, and then the visa needs to be put in place. So these sorts of things require planning. I think typically people who work in HR are very in tune with this, but sometimes these hiring plans are rolled out by people who work in sales or business development, and they don't have any sensitivity to some of these issues. Expats sometimes qualify for Social Security exemptions. There's a planning opportunity here in terms of savings on Social Security. Sometimes the tax planning can result in the ability to provide some pretty nice benefits to employees without them being taxable. And there's also the concept of a shadow payroll, where you move somebody to another country, and you essentially, the essence of it is you end up, you payroll them in their home country. Usually the purpose of that is to make sure that they maintain continuity of Social Security benefits, but you also then have to run a payroll in the local country, because that's fundamentally where they will be taxed, and they'll be exposed to the local income tax regime there. Requirements around the ratio. So this is an interesting one. We came across this just this week with a client setting up in Thailand, setting them up a legal entity. They want to transfer somebody there immediately, but they've run into issues because in order to hire an expat, they have to first hire, I think it was 3 locals or 3 or 4 locals, and the ratio of 3 to 1 needs to be maintained. So if they then wanted to take on a second expat, they would have to they have to have 6 or 8 local hires. So there's some advice to be given around that, and again, this is stuff we can support with through our HR consulting practice. And then the complications of split locations and cross-border travel. It's a bit of an obscurity, but we do we have situations where people live in one country and work regularly in another country, or even permanently in another country. A client recently who has an office in Germany but they wanted to hire somebody who lived in the Netherlands to head up that office. And this individual was going to be driving down the motorway into Germany every day to work. Bit of a case study in terms of how do you deal with payrolling that individual, resident in the Netherlands, living in the Netherlands, but providing their services from a geographic perspective in Germany. So complications like that don't often come up, but they are, it's important to consider how to treat and tax people, particularly when they travel extensively for business, particularly when they're going to the same place time and again. And I think that's it. So hopefully this has been helpful and interesting and useful in terms of explaining the things to contemplate, what the options are, the things to be sensitive to, the areas to consider when looking to hire people in other countries. So hopefully, David, apologies, I haven't got the chat up on the side of my screen. So if you can let me know if there have been any questions, then we can work through those.
Yeah, we've got a couple of questions. I'm also conscious of time, so maybe we'll just run for another 5 minutes, perhaps, and then we'll close the session out. So the first question relates to PEO and that point around permanent establishment that you talked about earlier. How many employees can you put on a PEO before a permanent establishment risk may be triggered?
Oh, that's a good question. So one person on a PEO can create, depending on what they're doing, but one person in another country can represent a permanent establishment risk if it's and a lot of companies use PEO as a way of expanding their sales capability very quickly. So hiring salespeople in multiple countries at the same time. This is typically when companies want to use the PEO service because it's so quick. But unfortunately, it's when it creates the most risk, because sales activity is commercial activity, and that in itself represents strays into permanent establishment territory. So obviously, the more people that you have, the more likely it is to be, I suppose, recognised by the tax authorities. But fundamentally, one person can create a permanent establishment risk through a PEO. But of course, one person is less likely to crystallise it than, say, 10 people who are all working in sales. So it does depend on what they're doing, but assuming that their activity does stray into permanent establishment territory, then one person is all it takes.
Okay, thank you. Next question relates is a specific question in relation to Spain. We are looking to hire an individual in Spain. What is the lead time for onboarding and getting somebody paid?
So that is if we go without the legal entity and just try and create that light touch solution for Spain, it's probably things have been. The COVID situation has made things a bit more difficult because there are face-to-face meetings that have to happen between our team and government officials in Spain in order to get the registrations made. So it's been quite variable over the last 12 months. But typically for Spain, with a little bit of extra admin that's required, I would say realistically it's going to be 6 to 8 weeks. On a good day or with a good process, it can be quicker. But realistically, I would say 6 to 8 weeks.
Okay, and we'll just take one final question. It's specific to UnaTerra. How does UnaTerra provide multi-country payroll?
Okay, multi-country payroll support. So the way our process works is that all our services are delivered through a central team. So we're fundamentally a UK-based business. David mentioned that we do have operations and people in other countries. But we're fundamentally a UK-based team, and all our services is fronted and delivered through our UK team. So in situations, and we do have clients where we support as many as 15 countries of payroll. All of that service is delivered and fronted by our UK team. And so part of the advantage of our offering is that multiple payrolls and our clients' relationships in terms of managing multiple payrolls are all focused through one small team of people, typically one person who is their point person for all their international payrolls. And so it's all delivered through our UK team, and we have an online portal which is the tool through which we communicate and seek approvals and deliver and push and pull particularly data sensitive information around new starters and payroll data. But fundamentally, all our services joined up through our UK team, and we run and manage all the international payrolls in the background, and that's how our service fundamentally works.
Okay, that's great. Thank you. There are some other questions, but they're more sort of related to inquiries, sort of live inquiries. So I think we'll take those offline. So I think what we'll do is we'll close the session now. Thank you, everybody, for your time today. Thank you, Julian, for that overview and responses to Q&A. Very helpful. Please feel free to contact us should you have any specific questions or challenges. And also, please take a look at our website where there's some helpful information specific to countries. And we're constantly building out that collateral. And we will be scheduling a whole series of webinars throughout the year. So please feel free to sign up. Thank you very much, and enjoy. Hope you have a good rest of your day. Thank you.
Thanks, everybody. Bye.